Hello, everybody. Thank you for joining us for today's webinar hosted by the Entrust Group. Today we'll be building your 2025 IRA calendar. We'll be covering important dates, deadlines, and tax tips. Before we do get started, I do have to read a brief disclosure. The Entrust Group does not provide any investment advice or endorse any products. All information and materials are for educational purposes only. All parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering any type of investment. Today's agenda: we will be reviewing important dates and deadlines for your self-directed IRA. We're going to analyze new limits and laws and IRA tax preparation best practices. My name is Tony Unkel. I will be your presenter today. I am in my 6th year at Entrust. I operate the Northeast region, and I pride myself on educating investors and professionals on tax-preferred retirement accounts and alternative investments. A little bit about the Entrust Group. We are self-directed IRA administrators. We have knowledgeable staff, with most holding the CISP certification, and we hold monthly educational webinars. We have a little under $5 billion in assets under administration with 24,000 active investors and 40 years of service. And we do pride ourselves on the one point of contact business model. Based on your region, you will have one dedicated Entrust employee to help you with all of your IRA needs. Let's hop right into it. Important dates and deadlines for 2025. January 31st, the first one. Fair market valuation statement is required. The required minimum distribution statement and the IRS Form 1099-R. We can go into each one of those individually. For the fair market value, this reports the value of the balance of your IRA of December 31st of the prior year. This valuation is used to calculate your required minimum distribution, and the amount may come from the IRA holder. Custodians may use alternatives besides appraisals. Some values may be difficult to acquire promptly, such as partnerships and LLCs. So it's in your best interest to reach out to those partnerships or LLCs, inform them of the deadline, and they can get you a proper valuation. Required minimum distribution notice. This is provided to IRA holders who have a distribution due for the year. This is required for traditional IRAs, SEP IRAs, simple IRAs, and individual 401k plans. Failure to take your full RMD could be costly, up to a 25% penalty on the portion failed to be distributed. For 401k holders, failing to take an RMD could cause for a plan disqualification. Your RMD is due by December 31st. But your first year RMD can be extended to April 1st of the following year. The IRS Form 1099-R is the form that will give you all this information. Your custodian will issue this form to document any distribution from your account during the calendar year. The taxable amount will go in box 2A, highlighted in green. The amount of income tax withheld will go in box 4, highlighted in orange. And the IRS code that depicts this specific type of distribution will be in box 7 in blue. Next date is a March 15th date. This is the tax deadline for S corporations and partnerships. Please reference IRS publication 4951 and 541 for further information. SEP and individual 401k plans, establishment and contribution deadlines for S corp partnerships. You can reference IRS publication 560. Moving on to April 1st, this is the deadline for traditional IRA, SEP, and Simples and individual 401k participants who turned 73 in 2024 and delayed their distribution of their first RMD. This is when they have to take that RMD now. So if you extended it into April, April 1st is the new due date. April 15th, tax day. This is the deadline to submit your individual tax return, the Form 1040. Make an IRA contribution, not including extensions. Establish and contribute to SEPs or individual 401ks. are plans for sole proprietors or C corporations. More information on publication 560. It's also the deadline to recharacterize a current year contribution, as well as execute a corrective distribution of an ineligible IRA contribution. The IRS Form 1040 requires taxpayers to disclose their taxable income for the year, determining if you owe additional taxes or to get a refund. Total IRA distributions will be reported in Box 4A, and the taxable portion of the distribution will be reported in Box 4B. On April 30th is the deadline for IRA custodians and trustees to mail the IRS Form 5498 to IRA holders. May 31st, the IRS Form 5498 and 5498 SA must be mailed to IRA holders by May 31st. While the IRS Form 5498 SA covers HSA plans, the 5498 reports IRA contributions, rollover, Roth IRA conversions, and required minimum distributions to the IRS. The taxable amount of the distribution will be in Box 1, highlighted in green, and the amount of income tax withholding in Box 10, highlighted in blue. May 31st is also the deadline for IRA holders to remove excess ESA contributions for earnings for 2023. To remove excess contributions, simply request a withdrawal by contacting your financial institution. September 15th is the deadline for S corporations and partnerships that filed a tax return extension for 2024 to make their contributions. The same deadline applies to employers. Anyone that filled out a tax return extension establishing a SEP or individual 401k for tax year 2024. Deadline for S corporations and partnerships to make simple plan employer contributions. October 1st is the deadline for existing businesses to establish a new simple plan for tax year 2024. Some more October dates. October 15th, the deadline for C corporations and sole proprietors who filed an extension to establish and contribute to SEP or individual 401k plans for the tax year. Taxpayers who filed a tax extension or filed their taxes timely must remove or recharacterize a contribution by this date. The deadline for C corporations and sole proprietors, the ones who filed an extension, to make their simple employer plan contributions. And October 31st, IRA custodians and trustees must send out the document required to satisfy the simple plan notice requirements by this date. October is a busy month. November deadlines, November 2nd. 60 days before the following plan year, businesses must provide notices to their employees about the type of contribution they will be making for tax year, for the previous tax year. November 14th, IRA custodians and trustees must send fair market valuation notices to all clients by the end of the second week in November to update their assets' fair market value, except publicly traded assets with openly available market prices. On to December 31st, traditional IRAs, SEP IRAs, simple IRAs, individual 401k, plan participants older than the age of 72 must distribute their RMD by this date. Separate accounts, inherited IRAs must be established by this date for each beneficiary of IRA holders who passed away in 2022. Now let's get into the new stuff for 2025. We have new limits and new laws. Contribution limits for both traditional and Roths. They stayed the same. 2024 up to age 50, 7,000, same in 25. Anybody over the age of 50,000 can make an additional $1,000 contribution, bring your total contribution for the year to $8,000. So no change from 24 to 25 on IRA contribution. Traditional IRA modified adjusted gross income, also known as MAGI limits. We did have an increase across the board here from 24 to 25, went from 77 to 87,000, up to $79,000 to $89,000 for 2025 for singles. Married filing jointly, up to $146,000. Married filing separate, stayed the same, 0 to $10,000. And spouse of an active participant, up to $246,000 for 2025. Roth IRA limits. For single individuals, this did increase. It went from a max income from $161,000 in 24 to $165,000 in 25. For single individuals, married filing jointly is up to $246,000 this year, and married filing separate tax returns stay the same, 0 to $10,000. Employer sponsor plans saw an increase as well. For simple IRAs, your deferrals went up $500 in 2025 from $16,000 to $16,500. Catch-up contributions for anybody the age of 50 and over stayed the same at $3,500, bringing your total contribution if over the age of 50 from $19,500 up to $20,000. SEP IRAs, you can contribute less of 25% of your compensation, or $69,000 for 24, $70,000 for 25. Limit stayed the same at $750, and your max compensation cap was raised $5,000 to $350,000. Individual 401ks, employer plus employee contributions saw a $1,000 increase for 25 up to $70,000. Employee elected deferrals got a $500 increase to $23,500, and the catch-up contribution for ages 50 and older stayed the same at $7,500. For health savings accounts, single coverage saw an increase from $4,150 to $4,300. Family coverage, $8,300 to $85,550. And catch-up contributions for age 55 over stayed at $1,000. Quarterly educational savings accounts, no change here, staying at $2,000 contribution per year until a child is 18. New laws that take effect this year. Automatic 401k enrollment. There's a new 10-year rule for inherited IRAs. Inherited IRA RMD penalties. We'll take a look at each one individually. Oh, before we do that, we'll do some top IRA tax reminders. We can go back, come on 1 second. Just to touch base on this, automatic 401k enrollment, new 401k plans established on or after December 29, 2022 to implement an automatic enrollment feature in 25 unless an exception applies. The initial automatic enrollment contribution amount must be at least 3%, but not more than 10%. Each year thereafter, the amount is increased by 1% until it reaches at least 10%, but not more than 15%. The new 10-year rule for inherited IRAs. If you inherited an IRA from someone who died on or after January 1st, 2020, you are required to withdraw all the funds in the IRA no later than December 31st of the 10th full calendar year following the death of the individual from whom you inherited the IRA. Exceptions that can still withdraw funds from an inherited IRA over their lifetime beginning in the year following the descendant's death. Surviving spouse, a child of the descendant under the age of 21, a beneficiary who is not more than 10 years younger than the descendant, or an individual who is disabled or chronically ill. Inherited IRA RMD penalty starting in 2025, a 25% penalty will generally be assessed to those who do not take their RMD that year. Getting ahead of 2025 tax season. Top tax reminders. Maximizing your situation. Build, plan to max contributions or plan your tax loss harvesting. gift tax exclusion for qualified charitable donations, college savings plans, and spousal IRAs. Always maximize your situation. Do you have an up year or a down year? You got a raise for having a good year? Taxable compensation required. There's no age limit, no maximum income limit, earned income, income subject to Social Security tax. Took a loss this year, married, file a joint tax return, contributions are made to each spouse's own IRA. Gift tax and charitable donations. Ideally, with your financial advisor, you must review your annual contribution capability across all account types, current partnership laws and processes. Ideally, with your advisor, you must review your annual contribution capability across all account types. College savings plans and spousal IRAs. College savings plans save on taxes while saving for your child's college education. If not utilized fully in the future, you can roll to a Roth IRA and continue investing. Spousal IRAs. Many have a spouse that is ineligible from opening their own IRA. Non-working or another disqualifier, but you can open a spousal IRA and contribute on their behalf. Top mistakes to avoid. Dealing in prohibitive transactions. Hasty Roth conversions and indirect transfers. Not planning for UDFI or UBIT. Dealing with disqualified persons. Who is a disqualified person? That's you and your spouse, your parents, grandparents, and great-grandparents, children, grandchildren, and great-grandchildren, fiduciaries of the plan or service providers. Understanding your rules and consequences when engaging the disqualified person or prohibitive transactions that will disqualify your IRA. So if you engage in a prohibited transaction with a disqualified person, the entire value is considered distributed on the first day of the tax year. So remember, disqualified persons, parents, grandparents, children, grandchildren, spouses, and fiduciaries, anybody else outside of that list is a qualified person that you can engage with. Hasty Roth conversions and indirect transfers. Many complete Roth conversions without considering the tax implications and best timeline to complete. Hasty planning or not planning at all can cost you big on tax day. When transferring from one account to a similar account, like a traditional IRA to another traditional IRA, some accidentally move funds to their personal or non-similar retirement accounts first. This is considered an indirect transfer and a taxable distribution. Not planning for UBTI, unrelated business taxable income. How does it work? Unrelated business taxable income is money earned by a tax-exempt entity, like your IRA, that's not related to its tax-exempt purchase. The IRS defines UBTI as income from a trade or business regularly carried on that is not substantially related to a charitable, educational, or other purpose that is the basis of the organization's exemption. To verify if your investments are deemed UBTI, please consult your tax advisor. Let's wrap up. Interested in opening a self-directed? You can do so in 3 simple steps. First one is open your account. Step 2 would be to fund your account via transfer, rollover, or contribution. And last step would direct your custodian to purchase your asset on your behalf. What's next on the Entrust webinar calendar? We will be sending you a replay and additional resources, and you can register for our February webinar, which is the 2025 Real Estate Market Trends and Expert Insights. Need more information on self-directed IRAs? Feel free to visit our website, theentrustgroup.com, and access our Learning Center. Happy to open it up now for any questions, if anybody does have some. All right, we do have a couple of questions. First question, how is gold distribution taxed if gold taken in kind long term? capital gains income tax, the sale of that gold later. It has no capital gains. Definitely something you want to speak to your tax advisor about, but whenever you do a distribution, there is a fair market value of the asset being distributed, which will be recorded and sent to the IRS. So whatever value of the gold or metals that you're distributing, that's what gets reported. Next is, how do we know what kinds of companies qualify for us to invest from our Roth? Anytime you're doing your due diligence on any company you want to invest in, you can always bring up the idea that you are considering investing with your self-directed IRA, and that company can tell you if they will accept the IRA dollars or not. Most companies will. Is there an additional catch-up contribution provision for people over 60? No, just the 50 and over for the $1,000. Can I open a traditional IRA now and make contributions retroactive? No, once the tax deadline is passed, it's over for the year. There are no retroactive contributions. Yes, a link will be emailed out to everybody at the conclusion of the webinar. It'll also be available live in our Learning Center for you to download there as well. Can you invest in a company and have a role managing the company? Is this scenario deemed a valid investment? Another one, it's great to discuss with your attorney or your tax professional, but we can define what a disqualified person is under IRS Code 4975. They define any individual that has 50% or more ownership of a company, 50% or more voting power on a board, or considered a highly compensated employee to be a disqualified person. Whenever engaging in a investment in which you are an employee, director, officer, or manager of the company, highly suggested that you sit and seek legal advice or tax advice before entering into that transaction. What is a good way to report fair market value for real estate held in an LLC? Real estate appraisals. You have to hire an appraiser. Real estate is tough, but you do a competitive market analysis by a registered licensed real estate agent or a real estate appraiser to give you the true value. But we do understand, and the IRS understands, that real estate is valued at what somebody's willing to pay for it. But there are appraisals out there that you can go out and get appraisals if you're getting appraisal to approve a mortgage as well. So you will need a certified appraisal. How do we know what kinds of companies qualify for us to invest in a Roth? Is there an arm's length requirement? There's always an arm's length requirement when using your IRA. You can refer to IRS Code 4975 that deals with that. You can't be a director, officer, or employee that has 50% or more ownership, 50% or more voting power on the board. Keep it open for a couple more questions. What about other hard to value assets? Yes, there are assets are hard to value. To be a little more specific on a specific asset, but if, as we mentioned, if it's an LLC or a partnership, it's best to reach out to them to give you a proper valuation. When turning a self-directed IRA into a Roth account, it's the fair market value of the S. So if you're talking about doing a Roth conversion, then yes, we would get the fair market valuation provided on the K1, give you the value of the traditional IRA that we would convert to a Roth. Follow up to the real estate appraisal question. Does that mean you have to do one every year? The IRS requires the custodian to provide fair market valuations of the IRAs to them on an annual basis, which does mean that we have to go out to the account holders to provide us with the valuations of their accounts so we can provide that requirement to the IRS. How long does it take to vet the investment with Entrust? The Entrust group does not do any due diligence on the investments. That is the responsibility of the investor. So it's up to you to do your own due diligence. Investment processing times at the Entrust group can range from anywhere from 24 to 48 hours. We do have a fully automated investment process now. So as long as your paperwork is in order, submitted through the Entrust portal, we can fund an investment the same day that we receive paperwork, if not within 24 hours. Do you need to have professional evaluation for companies we invest in, or can we rely on what we are given by the company? If the company is providing you a proper valuation and they are willing to sign off on that valuation, we can absolutely accept that. Can you personally be a member of the same LLC as my IRA? Yes and no. You are a disqualified person to your IRA. However, the IRS does allow you to partner with a disqualified person at the creation of the transaction. So when you are creating your LLC, and you list yourself personally as a member and your IRA as a member, you are allowed to do that one time. Any future contributions to that LLC could be considered a prohibited transaction under disqualified persons. And if you are thinking of partnering with yourself, absolutely sit down with your accountants to make sure you cover all your bases before doing so. Couple more seconds. Keep it open for anybody. Any last questions coming in? Is there a limit on the number of direct IRA transactions per year? You can make as many investments as you want per year. I'm not sure if you mean, is there a limit on the number of direct transfers between IRAs, moving money from one IRA to another IRA? There is no limit on IRA to IRA transfers. There is a limit on IRA rollovers. You can only do one rollover per 12 months. Who we call to set up multiple Roths that are a little complicated. My contact information will be on the screen now. Feel free to reach out to me, phone call, email. I'm happy to assist you with whatever you need. You receive distribution funds from my investment sent to your personal checking. Can you write a check or send a wire to your account, or is that illegal? Once you take possession of the funds, it is considered a distribution. You have to work with your tax advisor and the investment to see how you can correct that. Can you invest in the stock market with your IRA account? Yes, in general, IRAs can invest in the stock market. Entrust IRAs cannot. We are strictly for alternative assets in the private markets at the moment. In the future, we do hope to bring a trading mechanism to the Entrust client base. It's something that's been discussed in the works. It's just not something that's readily available at the moment. We do hope to have that feature in the near future, but currently Entrust is strictly in the private markets. If you have a sale of private equity holding, how should the funds be distributed? If that private equity investment was made within the Entrust IRA and you sell off, all those proceeds have to come back to your Entrust IRA. From there, you can decide if you want to distribute them to yourself or you can transfer them to another IRA. One more minute to keep it open for any last minute questions, and then we can wrap up. Well, I thank everybody for joining. Please find my contact information on the screen should you have any additional questions that come to mind. Happy to chat and answer them. Also, you will be emailed a copy of the presentation as well, and it will be available on the Entrust website in our Learning Center. I thank everybody for joining us today and enjoy the rest of your week. Take care now.